Hey soldiers, what if you went to the bank and you tried to make a withdrawal and they said, sorry, you can't have your money? You'd probably say, oh, wait a minute. I'm going to call the attorney general. I'm going to make a big fuss. And then you went ahead and you called the attorney general and he or she said, yeah, well, about that. Well, your bank is acting in accordance with the law. You can't have your money because a bail-in has been initiated. We're going to talk about exactly what a bail-in is. It is legal, okay, and it exposes you to financial risk. And what we need to do is have a real conversation about constructing parallel economies, because the direction we're going in with CBDCs, for example, with the national debt and what might be done about that, okay, you need to understand that the bailout becomes a pretty real possibility, okay, as we move forward. Now look, guys, it's not paranoia if they're really out to get you. So we're also going to hear from the FDIC. They're going to tell you in plain language. These guys know they're being taped. They don't care. They're just telling you, hey, look, general public, hey, we can't really let them know about this bailout thing because they might get ahead of the game. We don't want them there. Honestly, wait until we play that. You're going to be blown away. All right, but first, let's talk about what a bail-in is. And in order to have that conversation, we got to first preface it by properly characterizing what your deposits are in a bank. When you deposit money in a bank, you become a lender. You have, in effect, loaned the bank money. Now, they're going to pay you some paltry interest rate because, that's just how it works. And then the spread is they go and loan the money you loan them. They loan it on a credit card and they make 16%. They give you less than 1%. Okay, fine. We've discussed that at length. All right. So you are a depositor, a lender to the bank. Now, your deposit is an obligation that bank has. But think about it. When you are loaned money, it becomes your money, right? All right. Yeah. And now you do owe it with some interest. If that was the agreement, you do owe it, but the money's yours. Now with a bank account, it's an on-demand kind of thing. So if you decided you got $1,000 in the bank, you need 200, you get up tomorrow morning, you go to the bank, either you go to the ATM machine or you go to the teller and they give you the money, more than likely. But again, say you go to that ATM machine and says, sorry, bail-in protocol in effect. No withdrawals allowed, or you're only allowed to get 10% of whatever it is you want per day. So you wanted 200, we'll gladly give you 20. Would you like that in 2 10s or 4 5s or 120? All right, so a bail-in is a form of financial relief for a financial institution. It provides relief for an institution that is at risk of failure. It does this by making it so that any debt that is owed to the depositors and creditors is canceled. Now remember, when you have a bank account, you have in effect lent money. You are a depositor. You've lent money. You, in some ways, are a creditor. Okay, but either way you want to slice it, you don't get anything under a bail-in. Why would a bail-in be initiated? Well, maybe if the United States was preparing to go into default. All right, because of the $31 trillion we currently owe and the $50 trillion that we will owe, according to the Congressional Budget Office. We will owe $50 trillion by 2032. And 1 trillion seconds ago was 31,000 years. So that I always like to give some perspective of the magnitude of just $1 trillion. Okay, so that's one reason why you could see a bail-in, because banks would be in a position like SVB. We just saw where SVB and Signature made some bets, okay, some investments. And that's what's happening a lot more with these banks. It used to be a time where you put money in and they lent it out. Now it's looking more like you put money in and they take that money and they invested in things other than loans. Okay. So that makes it a little bit riskier. If you don't believe me, just ask SVB. Janet Yellen, we did a report when she came out and she said, look, yes, we did make SVB depositors whole. We went above and beyond the FDIC limit, and we made all of them whole. And when the senator asked her, well, are you going to do that for everybody if the banks go, defunct? And she flat out said, no, not going to do that. She basically said that, if you weren't somebody that knew somebody and in one of these important banks, okay, you were just a little podunk community bank that services the farming community or, the community of blue collar working folk. Well, no, it's not strategically important. So tough shit, basically, is what she said. Okay. Expletive was mine, but that's what she should have said. It would have been a lot more succinct, and it would have actually done the public a lot of good by her saying that. Now, I want you to understand that these banks, the people that are supposed to be, they always tell you the government's looking out for you, right? Well, the FDIC, the Federal Deposit Insurance Company, recently had a meeting where they actually talked plainly about the fact that they're trying to obscure this bail-in language from you. Now, why would they try to do that? If it wasn't something that was possibly impending, why would there be a need to, obscure and conceal this type of information? That's what the Soldiers of Finance channel is all about, is letting you know what's actually going on out there. Because as you're going to hear in just a second, the federal government is like, they're the antithesis of that. They don't want you to hear this, okay? But this is them, in their own words, the FDIC. Here we go.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices, this is similar to what Jay was saying, in the market that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
I might go further than that, Don, because I think that you look at the evolution, I think we have to sit down and talk to long-term debt investors and make sure that they, as a stakeholder group, fully understand bank debt today is not what it was before. It is not principal protected by design. And I think that expectation, I like how you started off, Betsy, like it's all about expectation setting. And I think that is absolutely critical. If that doesn't hold, this whole thing doesn't hold.
We're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on. It should be there. It should be accessible when people need to know. But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Okay, so what did we hear there? Let's go over this in detail. Bank debt is not what it used to be. Absolutely not. Like we were saying before, bank debt is not being lent out, to the tune that it was. It's being invested. Okay, it's being traded. That's a lot more risky than the old paradigm. Another guy says it doesn't have to. You don't have to have a professional need to know. We, the public, we don't have a professional need to know what's going on potentially with an impending bailout. What do I have here? I can't read my own handwriting. Should I be concerned? The public has more. Oh, yeah. The public has more confidence than we do. You heard the guy say that. The public, we have more confidence in the banking system than they do. And the guy chuckled like, yeah, you ain't lying. So this is incredible. This is, they knew they were being taped. They're not trying to hide this. Maybe they were trying to do you a favor. Goes on to say a select crowd will understand. A select crowd will understand. Careful about letting the public know about what's going on. Listen, guys, you're being led to the slaughter via disinformation. Let me know in the comments, guys. Have you seen that clip on any of the local news shows? I don't watch the news. Have you seen that where they, in between talking about who got murdered and political corruption and what the local sports team is doing? Have you seen that? Okay. How about cable or network news shows? Have they showed that? Okay. You tell me. So what do we do about this? That's what we got to ask ourselves. Well, guys, it's a high time that you started building your ark, right? Don't wait until the deluge comes. All right. The clouds are already accumulating here. All right. So it's obvious what's about to happen. They just told you. They're not sitting around having a meeting about this for nothing. All right. They're sitting around having a meeting about this because, it's probably a potential to happen sooner rather than later based on our debt, based on the way that other countries are running away from the dollar. All right. Based on wars and rumors of war. Look, here's what we need to do. Okay. Building out this parallel economy is going to first include you getting in the best shape physically, mentally, and spiritually that you possibly can. Okay. Now, the reason you want to do that is because you want to approach things rationally and with a clear head, not emotionally. And then you want to be able to actually, utilize your human body. You don't want to get sick for a couple of reasons. It takes you out of the game and it costs you a boatload of money. Then it also affects your family if the worst occurs. All right. Now, sure, we are human beings and things will happen that we just don't foresee, no matter how, well we keep our bodies. Okay. This is just luck of the draw. My mother was one of the healthiest people I know. She contracted cancer. Okay. I know another person eats well, takes care of themselves. They did too. So who knows? Okay. But to the extent that you can keep this asset in top-notch condition, you really need to do so. All right. Because you want to stay out of a situation where a lot of your money is going to healthcare. You want to stay out of that situation. And you want to be able to do things like purchase some land. Let's move forward. Purchase some land and be able to grow some food on it. Because look, I'm talking turkey to you. When you talk about wealth, laugh at oh yeah, he's rich over in Africa because he's got 17 herd of cattle. Well, guess what? You need to look at your ability to feed yourself to some extent, to be able to replace some of the calories for you and your family to some extent. Okay. And the reason why you want to do things like this is because you want to separate some of your wealth outside the system. Sure. 3 months worth of ability to pay the bills. When they turn that thing into a CBDC, and that's starting, the groundwork is being laid for that starting this July 2023. When they do that, sure, have some money out there that's able to cover you in case the unfortunate occurs, you lose a job or, there's an emergency or something like that. But then, these are suggestions. You do what you want to do based on your situation. I'm telling you what I'm doing. going out there and purchasing some land that I can cultivate, that I can grow things on, that I can lease, can make an income from, all right? Keeping that, because that land, real estate, is going to appreciate in value, and it's going to do so without necessarily the need of the system. Now, unlocking that equity, because real estate is not liquid, unlocking that equity would, in most ways, in many ways, entail you actually getting a loan or selling the property. Then you're going to have, in most of those scenarios, money go into the system, at least temporarily. Now, another way you can unlock the utility of the property in a monetary fashion, of course, is by renting it out. And whatever arrangement you come to with whomever you're renting to is, what you come to. All right, so we got real estate. We got keeping yourself healthy. Of course, we always advocate not keeping a whole bunch of money in the bank in the first place. Don't be stupid like Roku, who kept $500 million in a bank with $250,000 worth of insurance. Idiots, okay? And I like their products, but apparently their accounting department, they're idiots. All right, you want to keep money outside the system, real money, okay? I think. Again, do what you want to do. But I think that at this point, has there ever been a point where it wasn't smart to have some money outside of the system? And I'm talking money. I'm not saying currency. I'm talking about money. I'm not talking about fiat currency, okay? Because they're trying to quash that. Money is land. Money is gold. Money is silver. Money is your health, okay? So keeping something outside of the system and just exposing that to the system whenever it's time for you to make a big purchase or to somehow interact with that system if you need a loan or something like that. Those are ways that I believe for now we can start to construct this parallel economy and reduce our exposure to these jackals like these guys you just saw on that recording who really don't care about us, don't care enough about us to want us to be informed about this bail-in. And this is the trick that the government has played for so long, is to make sure that the masses, oh yeah, go watch your little Super Bowl or your NBA playoffs. Somebody was talking to me about two ladies who play basketball. I think it's college basketball. And one held up a hand and then the other held up a hand. And now that's racist and everybody's focused on that. Hey man, that's the kind of thing that the media and the government want you to pay attention to in order to distract you from things like Dodd-Frank and the ability to bail in or take your money. And it's legal. All right. If somebody came up and stole your pocketbook or pickpocketed your wallet and ran off, they have a court them, they charge them with a crime, unless they're in New York or LA, then they get away with it. But in a sane place, they would charge them with a crime and they would, possibly face some time. But a bank can take your money and, that's just the way it goes. Okay. So guys, I want you to pay close attention to this. Go ahead, subscribe to the channel. I don't think I said that. Thumbs up the video if you made it this far. Go ahead and hit thumbs up. This is, I think, one of the most important videos that I have done so far on the channel. And I want you to stay tuned to this. Now, I want you to also watch this video. 40% of the population of the planet is turning their back on the dollar. That is going to slide us further toward insolvency, okay, and a loss of reserve currency status at some point. All right, guys, I'll talk to you soon.